Let's talk to Wilson Leung. He is the Chief Market Strategist at Trendsetter FX. Very good morning to you, young Wilson.
Good morning, Nick.
Right, two charts to go through with the crowd. Let's kick off with the first one, the spot euro dollar, the daily chart, Japanese candlestick. What are your observations on this?
Well, as you can see, it has been chopping basically sideways for over a month after having plunged to a 10-month low towards the end of May at 115.10. But then had a nasty short covering that took the euro back up to 118.52. Since then, market tried to push the euro lower, and they managed to push it down by just one tick to 115.09. But after that, we have seen a bounce last week back to 117.20. So bear with me if you're not a chartist, but from the technical perspective, Nick, we can see a double bottom formation on the euro dollar daily chart. So because the low at 115.09 was also accompanied by bullish convergences on the daily indicators, MACD, RSI. So that looks to me that we have seen a temporary low, which is likely to hold for the rest of this month. This would be my opinion. Okay. So we're going to see more sideways swings. So if you want to talk about geopolitical fundamentals, the worst is over. The EU has struck the migration deal, and then Germany had sort of resolved its squabble within the coalition parties. Then, so I think that. Can you tell me any bad news on the euro? Just now, I cannot find any bad news.
Well, again, in theory, when we look at charts, everything is priced into the chart, right?
Right. So now that people have tried the downside a few times and did not succeed, to me, the path of least resistance is to the upside. Okay. So I'm bullish in the next couple of weeks for the euro to go higher. So once we can move above the so-called reaction high at 117.20, that's last week's low, then we will be back up to 118 figure 10. Yeah. But I think that the previous high made in June, 118.52, would hold from here. So the strategy would be to buy the dips. Yeah. If you are daring, I think that ahead of the non-farm payrolls Friday, you can buy the dips anywhere near 116 target, 117.50 to 118 even, and then you put a stop below 115.50. So that's my recommendations for the week. Even though we have a strong non-farm payroll number this Friday, I don't think that it's got enough momentum to push the euro lower. I think that somebody there is defending the 115 level. That's an option barrier. Or defense. Yep. I think that it's okay to buy the euro on dips.
Okay, let's have a quick look at the second slide, the weekly. Again, that looks a little bit toppy to me, but you think that we found an area of support?
Well, I think for the short term, the euro has definitely found a floor at 115, above 115. Yeah. But I think that's because the weekly indicators are still pointing lower. And I had looked at the dollar index. It's in a sideways pattern. So what it means is that the king dollar may reassert itself and move higher after current consolidation is over. So how does it pan out? Reflect on the euro? That means the euro, we will see consolidation higher, and as long as we don't close on a weekly basis above 118.52, I am a euro bear for price to go down to 114, and then ultimate target for the year 112 even. If we close above 118.52, I'll close my book on the shorts, because target would be on the upside. This risk would be going back up to 120 at least, Nick. So that's my take on euro medium term.
Wilson, thank you very much for taking time out for us. That's Wilson Leung. He is the Chief Market Strategist at Trendsetter FX. Thank you.